You're not supposed to win this game. That's the part no one tells you. You work, you earn, you pay. And what's left? A few $100 in a checking account that barely keeps up with inflation, while someone else who makes the same as you is buying real estate, flying business class, and paying less in taxes. How is that even possible? The system isn't broken. It works perfectly. For them. Because billionaires don't follow the same rules. They redesign the board. And if you don't know how they do it, you'll stay stuck on level 1, trading time for money while your wealth leaks out quietly. Paycheck after paycheck. But there's something even more twisted beneath the surface, and I'll show you exactly what it is in a moment. Before we go deeper, here's something important. This channel is about to cross a major milestone. We've built this space for people who are done with excuses and want clarity, not hype. When you subscribe, you're not just helping us, you're helping yourself. Because every new video brings you one step closer to mastering a game you were never taught to play. If this already hit you somewhere deeper, subscribe now. Let's break the cycle together. Jake earns about $90,000 a year, a decent salary by most standards. He clocks in early, avoids debt, does everything by the book. Taxes, insurance, mortgage, he's got it all covered. But at the end of each month, he feels squeezed. There's never enough to save, no room to invest, just a quiet cycle of effort and survival. To the world, he looks responsible. But inside, he's exhausted, constantly calculating if he can afford a break, literally or financially. Now, meet Dylan. Same age, same job title, same income. But somehow, Dylan's life looks lighter. He talks about assets, compound returns, and strategic deductions. Last year, he spent a month working remotely from Costa Rica, paid less tax than Jake, and is already planning to buy a second rental property. What gives? The difference isn't intelligence, it's exposure. At some point, Dylan stopped asking how to earn more and started learning how to keep more. Not by cheating, by understanding the game billionaires play and adapting it to his own level. But here's the twist that no one sees coming. Jake and Dylan actually started from the exact same point. There was just one decision that split their paths. And we'll get to that in a minute. Jake's mistake wasn't laziness. It was believing that earning more would solve everything. It's a quiet illusion sold to millions. Climb the ladder, get promoted, earn a six-figure salary, and somehow life will balance itself out. But no one tells you what happens next. As Jake's income increased, so did his taxes. His bracket shifted, deductions disappeared, and suddenly, the raise he worked so hard for vanished into government systems he barely understands. This is the silent tax trap. You work more, but lose proportionally more. It's not just about how much you make, it's about how you make it. Employees, like Jake, pay the highest tax rates. Their income is taxed before they touch it. But people like Dylan, they reclassify income. They convert earnings into capital gains. They shift tax burdens legally, using strategies that were never taught in school, and are buried behind language that sounds too complex for the average ear. Most people stay in this trap because the system rewards silence. You're not supposed to question why someone making the same salary as you can pay a fraction in taxes. You're just supposed to assume they're lucky, or worse, cheating. But they're not. They're just playing a different game. And that game has one rule that almost no one talks about. And it's the rule that changed everything for Dylan. We're almost there. Here's the rule that split Jake's and Dylan's paths. The wealthy don't earn their money. They position it. Dylan stopped chasing higher salaries and started learning how to leverage money. Instead of asking how to work more, he studied how to make his income work for him, using structures that protect it from unnecessary loss. This is where the concept of leverage enters. Leverage is what turns a shovel into a machine. While most people use raw effort to build wealth, overtime, promotions, freelance gigs, wealthy individuals design mechanisms that multiply returns without multiplying effort. They set up entities like LLCs, which allow them to manage money as a business, not just as individuals. The result? Access to tax advantages, deductions, and structures that reduce what they owe and increase what they keep. Imagine two farmers. One plants seeds in open dirt and watches the rain destroy half the crop. The other builds a greenhouse, adds irrigation, and protects his investment. Who ends the season with more? That's what leverage looks like. And the first tool Dylan used to shift his game was shockingly simple. But it wasn't taught in any finance class, and Jake didn't even know it existed. We'll break it down in the next few minutes, because once you see how the wealthy apply this 10 times over, the rest of the strategy clicks into place. Now we open the playbook. These aren't tricks or loopholes. They're structures, quiet, legal, and incredibly effective. Dylan didn't invent them. Billionaires have used them for decades. But because they require setup, not hustle, most people ignore them. That's the first mistake. First, LLCs and trusts. Instead of earning as an individual, Dylan created a business entity. This shifted his income classification, unlocked deductions, and gave him legal control over how profits were taxed. Second, capital gains over salary. While regular income can be taxed up to 37%, long-term capital gains, money made from investments, often face just 15% or even zero in some cases. Dylan learned to prioritize assets that grow quietly, then extract profits with minimal tax impact. Third, borrow. Don't sell. Wealthy individuals often borrow against their investments instead of selling them. This allows them to access cash without triggering a taxable event. It's how billionaires stay cash-rich while avoiding tax on gains. Fourth, Roth IRA optimization. Dylan opened a Roth IRA early, funding it with after-tax dollars. But now, every dollar it earns compounds tax-free. When he retires, he'll withdraw thousands legally without paying a cent in tax. Fifth, deferred income. This is about timing. By deferring part of his earnings through certain retirement plans or contracts, Dylan legally lowered his current tax burden, allowing that capital to grow before the IRS touches it. Sixth, real estate cost segregation. This strategy front-loads depreciation, allowing real estate investors to write off larger amounts in early years. Dylan used this when he bought a duplex, drastically reducing his taxable income while building equity. Seventh, charitable giving with intent. Not just donations, but structured giving through donor-advised funds. Dylan aligned generosity with tax efficiency, gaining deductions while contributing meaningfully. Eighth, employing family members. By legally hiring his teenage nephew for digital work in his business, Dylan shifted income into a lower tax bracket, keeping money in the family, tax-optimized. Ninth, offshore structures. While complex and not suitable for everyone, some billionaires use international legal structures to reduce corporate tax exposure. Dylan didn't go that far, but he understood why it works. 10th, lifestyle through the business. Dylan began using his business entity to write off parts of his car, travel, meals, and even tech, all legitimate expenses that double as life enhancers. Each of these isn't just a tactic, it's a mindset. They reflect one truth: The wealthy don't wait for permission. They study the rules, then use them with surgical precision. But this next part is where the emotional weight lands. Because while Dylan moved forward, Jake didn't just stay still. He fell behind. And the consequences weren't just financial. Dylan's transformation didn't come from sudden wealth. It came from strategic patience. He didn't earn more than Jake, not at first. What changed was where his dollars went, how they were classified, and what they were allowed to do. His money became active, protected, and directional. Each decision he made bought back time. By age 35, he had enough passive income to cover his living expenses. Not luxury, but freedom. He wasn't chasing, he was choosing. Jake, meanwhile, stayed the course. Not out of ignorance, but out of fear. Complexity felt like risk. Legal structures felt like scams. So he stuck to what he knew. Work harder, hope for a raise, contribute to a 401k, maybe retire at 65. But every year, the gap widened. Inflation ate into his savings. Taxes rose with every promotion. And worst of all, his energy declined, just as his obligations grew. The cost of inaction isn't just measured in dollars. It's measured in pressure, exhaustion, and missed opportunity. Jake didn't fail because he was careless. He failed because he trusted a system that wasn't built for his success. And by the time he started asking questions, the answers required sacrifices he could no longer afford. What separates these two paths isn't talent or starting point, it's timing. And the most painful truth of all? Jake could have made the same choices. But he waited. And that delay cost him everything the system was never going to offer voluntarily. There's a quiet awareness that separates people like Dylan from the rest. It's not about shortcuts. It's about control. The wealthy understand one thing that most people never even question. The tax code isn't a punishment. It's a guide. It rewards those who build, invest, and create infrastructure. It penalizes those who only consume or follow default paths. Dylan didn't find a cheat code. He simply read the rules early and acted. Meanwhile, the majority, like Jake, operate from inherited assumptions. That taxes are fixed. That salary is the safest path. That complexity equals danger. But these beliefs come from a system designed to prioritize labor over leverage. A system that never expected you to question why you're paying 35% while someone else pays 10% and flies private. Warren Buffett once said, "I pay less tax than my secretary." And he wasn't bragging, he was warning. The difference isn't moral, it's structural. And unless you learn to operate with the same lens, you're stuck playing defense in a game that demands offense. But the information gap is shrinking. Access has shifted. Content like this exists because people are finally realizing that personal finance isn't about cutting coffee. It's about redesigning your framework. The only question left is whether you'll do something with what you now know. Or wait, like Jake, until waiting costs too much. There's no need to change everything overnight. But there is something powerful about taking one deliberate step in the next 24 hours. Not someday. Not when you're ready. Now, because clarity without action fades fast. Open an LLC. In most U.S. states, it takes less than an hour and costs under $100. That one move changes your relationship with money. It separates your identity from your income. It opens doors to deductions, flexibility, and a new mindset. Or take 30 minutes to understand how capital gains differ from your W-2 paycheck. That alone can explain why someone earning less ends up with more. Maybe it's time to stop renting and learn how house hacking works. Maybe the first property isn't a dream home. It's a duplex that funds your real life later. The The trap was built to feel normal, so breaking it won't feel comfortable. But the first move isn't about becoming a millionaire. It's about escaping a system that was never optimized for your freedom. You don't need 10 strategies today. You just need to stop bleeding quietly. Because every delay strengthens the cycle that's been draining you for years. And every hour you wait is another hour the system wins. Jake didn't fail because he lacked ambition. He followed the path he was taught to trust. He worked, contributed, paid his dues. But the system didn't reward obedience. It penalized passivity. Dylan wasn't handed an advantage. He just questioned the rules earlier. He moved before comfort caught up with him. And now, you've seen both sides. You've met the version of yourself that waits, and the version that acts. They start from the same place, but only one reaches a life where decisions aren't dictated by money, fear, or hidden traps. If you've made it this far, you already stand apart. Not because you're special, but because you paid attention when most would have scrolled past. That already says more about your trajectory than any paycheck ever could. Someone you know is still Jake, still believing effort is enough, still hoping things will work out. Share this with them. Not to impress, but to disrupt. Because if this video hits one person before it's too late, then it did more than just inform. It created a shift. And maybe that's what you were born to do. Quietly. Intentionally. Starting now.